All right, everything looking good. We are live. Let's go ahead and get this party started. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is 8 p.m. Eastern Standard Time on August 3rd, 2022. Had to do the double take on that one. This year's flying by. Like always, like to remind you, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. If somebody just let me know in the chat, everything's coming through loud and clear. I will go ahead and jump off with this stream. So another big week in the markets. Obviously off to a pretty good start so far. We're essentially at the breaking point on a couple of our clear swings or pivot points, where essentially if we go any higher or lower, in many cases, we start to, I guess, reevaluate or look at our alternative possibilities. We're seeing, well, we'll jump right into it and just kind of take a look at everything. But right now, I'm really paying attention to this most recent daily close on crypto, the 4-hour as well. We had a pretty aggressive move back up trying to save the bear cross or get the bull cross, and then that has failed over the last couple hours, and now we see that daily close. So let's go ahead and jump right in here with the TNX. So we saw a pretty aggressive move back up with the TNX. Almost took out the prior 3 candles. We were discussing a 3-line strike in the chat, and that would essentially have been if we had these 3 bear candles and then the green candle went from all the way at the bottom of the last bear candle all the way up to the top of the next one. We didn't quite have that play out, but essentially that's what you're looking for. And typically it's a strong like reversal or continuation pattern depending where it shows up. So we back tested the 8. We then got above the 8 and back tested the 21. The last time that happened, we did get rejected and go lower. The most important thing is that we took out that swing, that neckline over the last few days, and then this looks like a back test. Now, the only thing is we technically have reclaimed it for now. If we get rejected and start closing below here again, we're going to look at this as essentially just an ugly head and shoulders and expect continuation. And then we have a bunch of other fibs in place. We hit most of the area right here, I'd say hit. We have 200 exponential, 200 simple, and then some lower fibs as well. Still strong overall, but paying attention as this does look a little bit toppy. The thing that has me really looking at this, thinking it doesn't look so bad though, initially we had some bearish divergence, and we've been hanging out at this range for some time. Looks sort of like distribution. But now at this point in time, we have trended all the way back down. The slope line on the TDMACD coming back down to neutral. We're just now getting a couple green histograms. The Stochs were all the way at the top of the range here. Now they're all the way back at the bottom of the range. So in many ways, we might be seeing essentially a bullish reset before we go higher. So we don't want to, let's not put that aside just yet. And this looks a lot like basically a breakdown that was very clear and concise, but then failed. So oftentimes what will happen is we'll see what looks like a distribution pattern, and then we'll see the breakdown, and then that will actually be a spring, which is basically a stop loss to the downside. The same way a throw over is a stop loss to the upside. It looks like we're breaking out or breaking down, and then whether it's intentional or whether it's just a failure, eventually there's either more buyers or more sellers, and price action responds. But in this case, we're looking at a pattern that would be a breakdown. The breakdown occurs, and then instead of getting continuation, we get a reversal. Oftentimes, that spring or that throw over, if it's at the top of the range, will be what propels the price in the opposite direction to see like further, either deeper move to the downside or higher move to the upside. So again, though, very, very close to confirming a breakdown, confirms the breakdown, and then immediately reverses it. So, and we've talked about the difficulty of essentially, obviously everybody's talking about yield curve inversion, but we've been talking about, essentially the amount of a 2 or 10-year treasury yield inverting in comparison to the actual Fed funds rate, and the difference historically between those two. We historically will see them invert, but you might see like the 3-month or the 2 or the 10 invert by a couple basis points. It's not often you see, a 1% difference between longer and shorter time frames, etc. when everything is essentially inverting. So how deep can this go? I mean, it can go deep, but seems unlikely with our, Fed funds rate, most recent 75 basis point hike. And the likelihood at this point in time, I mean, if you really go back and listen to what Jerome Powell said, I know it's easy to sit there and listen to what he says and say, oh, he's dovish now. But really, he's not dovish at all. And a matter of fact, he basically says, hey, unless we get more data that says inflation is coming down in line with our 2% target, it's expect another 75 basis point hike, or it's, we could get another 75 basis point. So I don't see why anybody would assume anything more than maybe you could say, oh, it sounds like they're dovish, so maybe they're going to go 50. But how much more data are we going to get between now and then that's going to suddenly change the Fed's mind? It's just not going to happen. Even if the data is there, the lag behind when we get the new data that would confirm anything like that is well after Jackson Hole meeting. So next, let's look at the VIX. Again, very clearly at the bottom of the range, very close to breaking down from that range. We're able to hang on to the blue support line. We have broken down from the channel. We have broken down from the triangle. We did that previously. But the actual close here in blue, we actually closed below that. And then again, we jumped straight back up, back tested. And now here we are back at that level again. So is this a confirmed breakdown and all of a sudden volatility is going to go down and the market's going to break out and everything's just going to rip to the upside? It's possible, but it looks more like, to me, this is getting ready to reverse sometime in the near future. Now, it doesn't have to play out like that, but we're at the bottom of the range. We're at the heart line of the horizontal. It seems very, very likely this is getting ready to explode back to the upside for another lower high, which would essentially be the stock market and, cryptos, etc., like topping out this most recent bear market rally, which it is 100% a bear market rally. There's people talking about it and they're saying, is this a bear market rally, or, is this the beginning of a bull market? And every beginning of a bull market starts as a bear market rally. But this is 100% a bear market rally. Until we confirm back into the bull market, whatever your metric is. I know what mine is. I don't know what other people's is. But based on ours, everything is still in a bear market, with the exception of a couple things that just haven't confirmed into a bear market yet. So next, U.S. oil. Again, very, very important right here. So we're seeing that U.S. oil has been holding on to the support level. And now we're basically confirming a breakdown from this, whatever you want to call it, a descending triangle, a channel, etc., a breakdown from the 200 exponential and simple. Now, we talked about the hypothetical situation where we basically backtest and what could happen if we go up from here. We talked about the measured move and what we would expect if we go down from here. We talked about the macro fundamentals, the macro technicals, and obviously where I think oil is going to be into the future. More often than not, though, the first time you come back down to 200 exponential and simple, you bounce that area. It's not crazy to think, again, we just spoke about, the throw over or the spring. It's not crazy to think we're going to get a spring where we get a confirmed breakdown and then we actually put in a new low. Everybody gets really bearish and then actually we break back up and then we just continue to range trade. Because that's the hardest thing for anyone. Everyone's trading the range, or maybe they're trading the breakout. Then the breakout finally happens, so no one's trading the range anymore, and then we just trade back into the range, so then everybody starts trading the range again. So essentially, it's just one more way the market can kind of, I don't know how to word it. Let's just say that, I talk about options a lot and how it's already difficult to be right on the markets, obviously. We see how many people over the last couple of years have just been horribly right or horribly wrong, and how they've been right for a while and look like geniuses, and then they've been wrong and they look like absolute morons, or vice versa. They look like morons for a decade and then they look like right for a year, etc. It is what it is. The fact of the matter is, time is just one more factor to put in. So if you want to guess on direction and you're like, it could go sideways, it could go up, it could go down. The only thing harder than that is now saying it's going to do that and then saying it's going to do it by a certain time. And that's what options are all about. So, a lot of times volatility is what you want to see in options. But in all actuality, if you just trade sideways, it could be the most painful. And we know obviously a very, very large percentage of options expire worthless. So, if people are betting on higher prices or betting on lower prices, not crazy to think that we just chop around sideways. So, but again, we see another key indicator. Obviously, we know rates are the price of money, and we know oil is, the price of doing business, transportation, creating goods, services, everything. We need energy just as much as we need food, just as much as we need, a price of money. So we see how important all of these charts are right now and like the relativity of them. So again, we see one that's very, very close to breaking down. So we see 10-year very close to breaking down from a range. We see the VIX very close to breaking down from a range. We see oil very close to breaking down from a range. Now I'm just going to skip out of order here real quick, and we're going to look at the DXY next. So DXY, obviously confirming a daily 821 cross to the downside, and then did have a powerful move to the upside. See, this one isn't quite as clean. We see we have like 3 candles in a row, but there's some kind of excessive wicks on the top. But we basically come in and bullishly engulf those 3 candles with a single green candle, and that's essentially what a 3-line strike is. I would prefer it to be a little better looking than this. I don't like a big old wick like that, but technically that meets the definition. So again, just something we were talking about hypothetically. So we've reclaimed the 821. They look very close to cross back to the upside. Again, we were very close to breaking down from key support, very close to, confirming down to lower to reset, test some support levels. And again, what is the DXY? Well, the strength of the dollar relative to the basket of currencies. So again, we see all of these key charts doing key things at the same time. And then based on what happens, which obviously we don't know what's going to happen, we can see what the clues are, etc., but we don't know exactly what's going to happen. But we know, obviously the way that these things have been corresponding with each other. If the dollar is strong, it's very hard for everything else to be strong. If the, relative to the basket of currencies, if rates are rising and strong, it's very hard for, obviously bonds are not going to be strong. Makes it very hard for, other risk on assets to be strong. Matter of fact, the more risky, the less likely they are to, perform. And then, going down the line, we can look at oil and see how energy and oil prices affect everything else. We can look at, how that's going to affect gold, how it's going to affect stocks, and just go right down the line. And, you can basically create a flow chart and say, okay, if this strengthens and this weakens, what's likely to happen, going out the next couple months, etc. So we know for sure that the main 2 things that have been strong as of late are DXY and yields. And then obviously we know about the inversion. And then obviously we talked about how Canada has stayed strong relative to the dollar, as where other currencies, have been weaker based on fundamental and technical reasons. And then when we couple all that together and then we look at energy and we say, okay, energy has been in this bull run now for the last, year plus, whatever, and is starting to look a little toppy. So now we have to pay attention to how this is going to shift. What happens if all 3 of these break down right now? What happens if just oil breaks down, etc.? So that's what we're paying attention to. And then we can look at that and say, okay, now we factor in the VIX. What's it going to look like? Well, one of 2 things is going to happen. This is our Dow Jones daily chart right now. We have basically got the move we were expecting. This was the move we were planning for. We came down, we tested support, we found support. That support level was our Rona top back here. We obviously found some key support off the 236, kind of sloppy, didn't quite get to the 382. The weekly moving averages, 200 exponential and simple on longer time frames. And what do we expect to happen? Well, we're going to back test the 200 exponential and simple. Here we break down below them. We back test them to make sure they're resistance. We go to new lows. Eventually, once we hit some support, once we get oversold or whatever metric it is, eventually we want to back test, retest fair value. This is our target. I mean, we're almost there now. This was our target, to basically back test the previous high, the 200 exponential, the 200 simple, the top of the descending broadening wedge. So when we were down here, people weren't bullish. But now everyone wants to get bullish up here. Everyone wants to talk about how this is the beginning of the bull run. We're really close to that actually being true. We're really close to that being true. And that's okay. I'll admit I was wrong if suddenly the Dow Jones starts closing back above, 34,000, and we flip the 200 exponential back blue, and we flip the 200 simple back blue. I will 100% be bullish, and I'll be, happy as a clam, or whatever that expression is. Because it's so much more easy to make money in a bull market. But we're not confirming back into a bull market. This is just a bear market rally. And as a matter of fact, until we take out this high right here, we're just putting in another lower low and another lower high. Until we get back above the 200 exponential or simple, we can't even begin to say that we're back in a bull market, let alone without flipping the slope back to the upside. So for me, nothing has changed. Matter of fact, the only thing that has changed is we were just right one more time off the low, back to our target, and now we would just expect, not to be arrogant, but we would just expect to be right again, where we just hit resistance and then sell off. And there's a ton of resistance right above our head. Maybe we don't even go higher. Maybe we do. We don't know yet, obviously. We see still some daily bearish divergence developing on our various indices. So here we have basically tagged the high. Here we came, tagged the high, and then, you know, it looks like we're trying to push up one more time. So we basically have now a high right here, and what appears to be, for now, a lower high right here. And then in the indicators, we either have the same high on them, or we have a much higher high here with a lower or same high. So again, bearish divergence showing up on the Dow Jones. And we know that the Dow Jones has been honest with us this whole entire time. We haven't had any false alarms from the Dow Jones. We haven't caught any, you know, BS little like scam wicks or crazy moves that later on reverse. I mean, the Dow has been straight up about everything it's done. Very, very meticulous. You know, just the fact that once the 200 simple got on top, that we did the typical, you know, put in a new high, bearish divergence, top out, back test 200 exponential and simple, bear cross, back test, and then bear continuation. So now back test here, either one could happen. We either get another continuation to the downside, or we push up here, and then we start talking about, you know, hey, are we going back into a bull market? But this is just our just absolute beautiful textbook chart of what we want to see. Bearish divergence at the top after we lose momentum in the 200 simple cross above. Very technical, you know, retest, very technical levels holding, acting as support and resistance, and then eventually, you know, trend identifying itself clearly with divergence. So next we look at the SPY, same thing. We got beautiful bounce off the bottom support right here. We back tested key resistance, broke out of the descending wedge, made it almost up to our you know, target area. We have the heart line of the macro channel. We have that previous high right here. We have the 200 exponential. We have the 200 simple. We have a macro fib. Everything just right here. And we're literally pennies away. So people are getting bullish right now, and it makes no sense. We are at our target. So you know, anybody, and again, you can do whatever you want. Obviously, none of this financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Just know that when I'm saying I'm selling positions, when I'm taking profits, just know that if you're buying when I'm selling, it doesn't mean the price is just going to reverse and you're going to immediately be wrong and I'm going to immediately be right. Or vice versa. You're going to immediately be right. It's going to go much higher and I'm going to look like a fool. Just know that if I'm selling, you're buying my position. You're trading against me. So, and that's fine. You can do that. And I'm wrong. I'll be wrong in the future. But just know that when I say I'm taking profits, it's because, you know, I think we're reaching our targets. Now, I can take profits on some positions and enter into a position on something else. So I can have bullish and bearish positions open at the same time because it has nice risk reward. And then either way price action goes, I could win. Or maybe my long can go, you know, bullish because it's in crypto, and my short can go, you know, bearish because it's on energy, etc. So we can be right and wrong, etc. But just know that when I say I'm taking profits, when I say, you know, we put these trade setups in and they're playing out, just know that that means you're basically buying my bags or buying my position or whatever. So that being said, back testing key areas at resistance right now. You know, can we get back above 433? Can we flip the 200 exponential and simple back bullish and go back into a bull trend? We for sure can. We definitely can. But let's just remember what the monthly chart looks like. This is what we talked about the whole time. The back test of the 8 and 21 on the monthly to try to avert the cross. So if we avert the cross, we're bullish. If we don't, new lows. Super simple. Super, super simple. I mean, very easy to explain what's going on right here. So next we have the IXIC NASDAQ Composite. Again, you know, found support at key levels. The 200 exponential and simple on the weekly, all that good stuff, blah, blah, blah. Back testing the 200 exponential, the 236, the 200 simple. You know, basically at resistance. We're almost there. We take out this recent high right here, which is good, but we didn't really see like some crazy burst to the upside that you would expect when you take out a recent like swing. But that being said, it is what it is. We're there now. I don't trust the, I mean, here we're putting in a new high right here. Here we didn't. I don't really trust the indicators and oscillators on the NASDAQ and the Russell nearly as much. In my opinion, they're basically just going to respond to whatever the real indexes are doing. Yeah, I mean, I could easily see them undershooting or overshooting, and I'm not going to pay attention to the technical levels as much. I mean, they're still important, but for the gauge of the market, I'm looking for confirmation from Dow or SPY, obviously. So then we have the Russell, again, exact same thing, back testing resistance, almost up to 200 exponential and simple, almost up. I mean, we see what's going on right here. We talk about we break down to this level, and then after that we back test at 236, and then from there we either break to the upside, go back into a bull market, or we break and then go 2 fib levels down, etc. So it's just that choose your own adventure playing out. Obviously, you guys know how I feel about the Russell. It's definitely trash, full of trash companies. And we're just, again, back testing, key resistance. So right now, for me, not the time to get bullish. Matter of fact, if there was ever a time to get bearish, it's now, because we're back testing resistance in a bear market. So literally the definition of, buying support in a bull market or selling resistance in a bear market. So, you've always heard buy the dips. That's great in the bull market when everything's blue. And then what do? When it's pink and red, you still buy the dips? I mean, most people do, but most people are morons. You're supposed to sell the rips. So that's what we start doing right here. We sell the rip, we break down, sell the rip, break down, and then this is a real test of key resistance. So, what do? You sell the rip right here, and then what happens? Oh, we're wrong. Oh, no. So we, have to rebuy $4 higher once we're above 100. But now the probability of this going in our favor is exponentially higher. As we're right now, we're selling into resistance in a bear market, and we would be rebuying above the 200 exponential, above the 200 simple, when they're both blue, and confirming into a bull market. So either way, we're buying with the trend. So it gives us an exponentially higher probability of success. Just got to be real careful when we look at these indicator oscillators, because they're at the complete top of the range. And again, the success rate of these things, I'm on XLI right now, the success rate of these things based on if you're in a bull market or bear market. When you're in a bull market, you want to buy whenever you see the green, but you don't necessarily want to sell whenever you see the red, because it just means the bulls are in control the whole time. When you go into a bear market, and here we see like the transition basically happens right here. Now instead of buying when it turns green, the bears are now in control. We're selling when it turns red and getting the hard sell signal. So we're selling here at the absolute top. We're selling here at the absolute top. We're selling through here, kind of sketchy, a little blah. Honestly, when we get a hard sell signal in the bearish control zone, we don't respect it the same way if we get a hard buy signal at the top of the range in the bullish control zone, we don't respect it. The key is to see the bulls in control and a hard sell. The bulls in control and a hard sell. The bulls in control and the hard sell. The bulls are in control. We're expecting a hard sell off of resistance. So we're much more likely to get a reliable signal on a shorter time frame when we're trading with the trend. So in this case, the trend is telling us sell resistance. The trend is telling us not to buy support. In the bull market, buy support all day. Front run buying support if you want. But XLI, just back testing resistance. I'm not going to do all the long time frames because we already did that. XLP, consumer discretionary, back on top of the 200 exponential and simple. Again, trying to avert the bear market. But what do we see taking place right here? We see the 200 simple is on top. And what do we know that means? Typically, we try to push up. We either put in a higher high or a lower high, and then the trend rolls over because it means we're losing momentum. Now, we know XLP, consumer staples, is one of our safety positions. That's the safety in the bear market or safety in the recession, depression, etc. So safety play looks phenomenal in comparison to all the other sectors, most of the other sectors. XLF, financial, horrendous, even after all of the earnings coming out and everybody talking about how, great everything is. Absolutely horrendous. Completely underperforming. These things are total trash. We see the 200 simple crosses over the top right here, and then lo and behold, bear market rally, underperforming substantially. Look at most sectors are already touching the 200 exponential and simple. Look at how pathetic this is performing. So what does this tell you about the future of, the industrials, or I'm sorry, financial sector, short to midterm? Not good. Not good at all. And why is that? Well, who gives a damn if rates go back down and they're super low if we're not making any loans? And who gives a damn if rates go super high if the banks aren't making any loans? Who cares? So we just had a massive period where banks made tons and tons and tons of loans at super low rates. And now rates are like super high and valuations are super high on everything you would want to buy. So do we expect financials to be making massive loans? No. Well, where else do they make money? Well, they make money speculating in the markets. Well, do the markets look good? Well, no. So Does either one of them tell us financial is going to do good in the short to medium term? No. Real estate, back testing the 200 exponential. Again, same thing. Seeing some bearish divergence show up right here. Back testing resistance, confirming into a bear market. Remember, this was in a bull market the whole way. 200 simple cross above, lower high, bearish divergence on our indicator oscillators. The peak is in, breakdown from support, back test as resistance, and then confirm we are in fact in a bear market and go lower. So I expect new lows on any chart that looks like this. I expect new lows until we break back above the 200 exponential and simple. They flip back blue. And then as we start to see, once that starts to happen, I'll get slightly bullish, like what we just saw. Next, I'll get with consumer staples. Next, when the 200 exponential crosses back over, I'll be much, much more bullish. But I'm not going to get bullish when we see a move all the way from the bottom of the range to the top of the range. We see bearish divergence showing up, and we're just backtesting resistance, confirming that we are, in fact, in a bear market, and we expect lower lows. No, thank you. No, thank you. Matter of fact, if I was trying to trick people into, dumping on their faces, you know exactly what I would do? I would return price action to 200 daily exponential and simple moving averages after a long rally, after a long downturn, and I would make everybody super bullish and excited, and then I would just literally dump on their faces again, which is what happens every time we go from a bull market to a bear market. So XLV healthcare, reclaiming the 200 exponential and kind of simple. 200 simple is still on top. Not great. We could still very easily put in a new high. We know this is a second of our safety sectors. Obviously great in bear markets, etc., recessions, blah, blah, blah. Again, we have to look out for divergence printing. We have to look out for, do we reclaim this or do we break down from here? But again, one of the better sectors. As of now, looks neutral to slightly bullish, which is way better than most things. XLB materials, again, looking pretty tired right here. As we essentially see an underperformance, pathetic bounce off of the bottom, nowhere near even hitting the 200 exponential or simple, nowhere near even filling those big old gaps. And what does the material sector say about, the future of the economy? XLY, consumer discretionary. Overperformed to the downside, had a nice pushback up to the 200 exponential, back testing resistance. Now we're at the top of the range. We have a big old, histogram spike right here. We have bearish divergence between these points. We're at resistance. We're back testing support. We're, getting ready to just go lower, it looks like to me. I mean, that's what I'm seeing. Doesn't mean we can't push up slightly higher first, but XLU utilities, obviously, looking great in comparison. This is the third of our safety sectors. We do still, for now, have a lower high. Once we take out this high, then we're looking at the all-time high. And after that, blue sky breakout. Obviously, momentum in its favor. We are at the top of the range. We don't necessarily, depending on how we're looking at this, I would say from the macro high right here, we have some bearish divergence developing until we take this out. As soon as we take that out, the divergence is gone. Everything's fine. I don't see any signs of us topping right here. It's worth paying attention to. But honestly, we know this is like one of the better looking charts or best looking charts. Basically, like, sector wise, energy, utilities, and then consumer staples are pretty much where you want to be, obviously. And even they're looking a little sketchy now. XLC, communication, complete meltdown, absolutely pathetic, hang out at the lows, by far the worst sector. Just absolutely pathetic. Look how far we still are below the 200 exponential and simple. Total trash sector. XLK. So we see how this looks essentially in comparison to the NASDAQ. Slightly more bullish as it's already reached the 200 exponential. Not crazy to think that any of our stronger indices could go up to the 200 simple. We don't have to just hit the 200 exponential and roll over. Matter of fact, you guys know I'm slightly biased in traditional markets for simple moving averages over exponential. So it would make actually a lot of sense to see even a little more follow through on S&P and Dow Jones. The only thing is we're just so close to confirming like serious breakdowns on like VIX and energy and rates and dollar. I mean, we're probably, if we break up from here on the Dow and the S&P and we just keep ripping to the upside, I mean, honestly, my base case will just be new all-time highs. So we're still a ways away from that happening, but it could literally be a week or two from now. We could be like, all right, that's it. We're in a bull market again. Seems very doubtful, but possible. Matter of fact, that's just crazy bullshit. But I'm just saying, hypothetically, if the data changes, I'll change. I'm not going to be like the Fed where I'm like, I'm data dependent. And then we like confirm back into a bull market and I'm like, I don't know. I got a funny feeling about this. No, fuck that. So XLE energy. So we saw we got the back test of the 200 exponential and simple. We're very close to the 200 simple crossing above. The closer we are to these moving averages, the more likely or sooner that's going to cross above. Typically telling us, hey, the trend's kind of getting tired. Now we did see here where we actually put in new highs after that happened. So it's not crazy to think we continue in a bull market. But we used a lot of energy to get where we're at right now. We do have a lower high, not printing any divergence or anything like that. But still very much in a bull market, strong. But again, the first bounce is usually the higher one. So now what's going to happen is if we start to top out right here, we're going to come back down. The market's going to be looking for one thing or the other. Either a lower low than right here or a higher high than right here. We don't know which one we're going to get, obviously. But it's not crazy to think. I mean, our target was the 0.5 or the 618. It's not crazy to think that that was it and we're done now. Also not crazy to think, hey, there might just be a little back test and then one more leg up here. But after that, we do expect lower prices. We essentially see the 0.5 fib was hit perfectly right here in purple. And then we back tested up to the 236 perfectly. So we essentially had a 2 fib level bounce back up. So oftentimes what you'll see happen is you'll see one more leg to the downside, like longer than what we just saw. So if we saw a 2 fib level bounce to the upside in purple, not crazy to think we see a 3 fib level bounce to the downside, which puts us somewhere around like 59. And then we have some macro fibs in orange and green and all that. So once we get down to here, that's our big blue box, is essentially our ideal entry point to go much higher. But doesn't have to happen like that. We go much higher from here. We break down from here and go much lower. But we're looking at those situations and seeing how they play out. Obviously, energy still by far the strongest sector. Transportation almost up there to the 200 exponential. Still well off the 200 simple. We're seeing some potential for that bearish divergence to print. We're seeing a pretty aggressive knife stab up here. Again, everything's maxed out basically at resistance coming from the bottom, back testing. So is it more likely that all of a sudden from here, we're just going to take off to the moon when we've used all of our energy to get here? Or is it more likely we just used a ton of energy to get where we are now, and now we're ready to go much, much lower? Because we see the last time, we're at these levels. Here we were at the, in the bullish control zone, and that was way up here at 91. Here we're in the bullish control zone, and that was just slightly higher at 80. And now here we are back in the bullish control zone. So, the last potentially 3 pushes have been just lower highs. So we'll see what happens. If we take out this high, we can start looking at these other key levels, start saying, hey, we're back on top of the 200s. Maybe we're going back into a bull trend. Doesn't seem likely we do it without at least some kind of back test and higher low, assuming we can even get above those. So still ways off, still plenty of opportunity if we do confirm bullish on these charts, but I'm just not seeing it right now. And then last we have the semiconductor XSD ETF. So this is playing out beautifully. Obviously, again, just for reference, we see that breakdown, fake breakdown, failed breakdown, stop hunt, whatever. Regardless, it's a spring. We broke key support levels, key, fib level, etc. Put in what amounts to like, an upside down head and shoulders or inverted head and shoulders. Push back up to the 236, the 200 exponential, likely get to the 200 simple and the ascending heart line of the channel. And then whatever we top right here, if we top right here, then it's like, oh, hang on, let's pay attention what happens if we come back down to the 382. If not, and we just keep ripping, okay, this wasn't a head and shoulders pattern and we were wrong, but we were at least watching for it ahead of time. And we could be right about to move back up here to the shoulder and then just wrong about whether it tops there and goes to the sky and still do well and be profitable. We don't have to get every move exactly right, but so far it looks like we're getting it. So we'll see what happens right here at these key resistances. Does it roll over? Because then it's really going to look extremely toppy. And again, we see how this corresponds with the moving averages and how head and shoulders and 200s can make this pattern very, very often. So does it look like we're topping out right here? Yeah, it looks like there's definitely a possibility. Could we easily just go higher from here? Sure. I'm not ruling it out. But we look pretty damn toppy to me. And again, we're seeing a lot of potential topping patterns in a lot of different charts as well. So, all right. So DXY, we basically already looked at. So we're going to go from there. Tesla, it made it all the way to 200 exponential. That was our initial target. Now it's a 200 simple. That was the final target for the trade setup. So again, this would be my take profit. I'm not going to be buying Tesla here. Now, if we start consolidating here for a bit, 200 exponential starts pulling back up, we stay on top of the 200 exponential and simple, we have to start looking at, hey, is it possible Tesla's re-entering into a bull market and likely to go higher? Is it possible Apple is re-entering into a bull market and likely to go higher? Yeah, it definitely is. Now, what is the probability that Tesla and Apple go into a bull market while everything else looks like trash? Not very high, but it's possible. But maybe they just lead us out of the bear market and everything goes into a bull market again. It just takes some time for some of the charts to look like that. So are Tesla and Apple actually telling us, like, really it's just about to be another bull market? Maybe. Doesn't seem likely, but maybe. And we can just go to our longer time frames and it's like, well, they actually don't look that great. So NEO, the back test of 200 exponential and simple and looking like it's ready to just let go right here. China definitely showing some weakness off those highs. We do want to pay attention, though, that it doesn't just find support and then just go higher here, because the truth is all we're looking for is just higher highs and higher lows, getting back on top of the 200 exponential and simple long enough that we can confirm back into a bull market. So Baidu holding on okay. Nice strong back test and holding on just below it. Baba had a pretty aggressive move down after and didn't quite get to the neutral levels of the 200 exponential and simple, but again trying to push back up. Doesn't look nearly as good. Already starting to threaten the lows. Nvidia again, still underperforming. I can't believe this is still happening right now. Just pathetic, slow grind up to the 0.5, the 236 macro, the top of the trade setup, the 200 exponential, 200 simple. Again though, I'm not greedy, so I've been locking in gains on basically anything that was hitting our targets. So I still have positions open, but locked in quite a bit of gains on basically anything that has moved in our favor. And it's also a possibility that the stuff that's already moved, the big indexes, etc., just kind of go sideways and chill for a little bit, and then a bunch of the trash stuff that's underperformed all catches up all at once as money cycles into that. And then after the trash finally catches up, then the money comes back out of the trash, goes back into the big names. Everything starts to sell off, but the trash just sells off a ton. The major indexes or bullish stocks don't sell off nearly as much. Definitely a possibility to see the cycle. We see it in crypto all the time, from Bitcoin to, top tier shit coins to absolute shit coins, and then back to, Bitcoin essentially. So AMD, again, nice little move up here, just back testing resistance. We see how the chips look. We see how the semiconductor space looks. We heard from, earnings and everything going into the future. I have to say that overall earnings look better than I thought. Does that mean that we're out of the blue or out of the clear, in the clear? Does it mean that everything's gravy? No, it does not mean that. There's definitely a possibility that, we just thought the numbers were going to turn a little quicker than they did. I was actually having a discussion with my buddy over the weekend, a good friend of mine, and talking about a survey I had seen. I can't remember where I saw it at or the exact numbers of it, but it was something like 75% of all people, maybe all Americans, when polled, they were asked, are you doing better or worse than you were doing in the last 3 years right now? And 75% of Americans said they were doing better. And then they also polled those same people and said, what about other people? Do you think other people are doing better or worse? And same thing, those people said other people are doing worse. So maybe it's just a really arrogant, kind of self-centered view that Americans or just people in general just assume that they're doing actually pretty good, but everybody else is doing shitty. I don't know. It was just an interesting conversation we had. I don't know anything about the viability of the poll, where it came from, the percentages or numbers, but it just was thought-provoking, because I was I could totally see that, where everybody thinks hey, I'm doing great, but everybody else is definitely doing shitty. The economy sucks, the world sucks. There's a lot of crazy stuff going on. I'm doing better, but that's just because like I'm resourceful, or I'm grinding, or whatever situation. Insert whatever adjective here for why you're doing good, but everybody else is doing shitty. I don't know. It was just interesting, thought provoking to say the least. And you know what? It could be completely wrong. It could be a fake poll. Matter of fact, in hindsight, maybe the poll doesn't even exist. I don't know. Maybe I'm just thought provoking you. But really though, I did hear that somewhere. So Intel's next. Obviously, Intel is trash. It's like the worst thing ever in all of existence. They came out, they did their earnings, and they were basically like, our company still sucks, but one day it'll be better. So obviously was not received well. At the lows, total garbage company, garbage stock. Obviously, you guys know how I feel about Intel. Been calling for low prices forever. Well, here we are on the monthly backtesting the 200 exponential, just above the 200 simple. We have 3 drives of bearish divergence on this complete garbage trash bag stock. Is it done now? Is it done selling off? And going into the future, it's going to be amazing, and it's going to get all these billions of dollars from the taxpayers. Not, I almost said government, but the government doesn't have any money. I don't know. It's probably still just going to be a trash stock. It's just going to have 30 billion more dollars. Apple. So obviously Apple looks phenomenal. 200 simple is still on top. Apple has reclaimed the 200 exponential and 200 simple, flipped them both back blue. We have to be careful here though. Again, don't want to doubt Apple on this one, but we see this very, very common with like our stronger assets, where when we go to confirm into the bear market, we actually overshoot a bit and then we roll over. So what we're looking for here is lower highs. If we take out the lower highs, we have to continue just getting more and more bullish. Looks like we're about to get the crazy divergence signal. Sell, buy, sell, buy. Eventually we're going to get a sell after that. If it's spaced out like 1 or 2 from here, it's probably going to look like pretty strong. But again, Apple chart looks phenomenal. Well off the lows. Compare that to one of these stocks that's literally at the lows still, compared to something that's like 30-40% off the lows. Now is Apple, single-handedly holding up the market? Not single-handedly, but let's just say it's doing the heavy lifting. So Google back up here, retesting that same level again, still inside this ascending channel. I would expect at some point in time it's going to make it up to like 122, retest the 200 exponential. I would assume it's not going to actually break out of this channel because it's just so weak and pathetic. Yeah, very weak. Amazon got that gap up to retest the 382, retest resistance, retest the 200 exponential, slightly below the 200 simple. Almost got the measure move. Not quite there yet. Again, are we just backtesting before we go lower? I would assume yes. Microsoft finally played out the remainder of that move. Congratulations to anybody that's been locking in gains on the recent trade setups. Obviously, we had a ton just blow up in the last couple weeks. Phenomenal. Like so many setups between 15 and 75% in literally like 2 weeks. So Microsoft backtested 200 exponential and simple, backtested 236, trade setup played out. So just remember, people that are getting bullish on Microsoft right here, just remember, I'm selling to you. So when I'm taking profits, you're buying from me. You're buying. So somewhere in there, there's a reason I want to sell, and there's a reason you want to buy. And one of us can be wrong. We could both be right. We could both be wrong, depending on the time frame. So Microsoft, again, one of the stronger stocks. We look at this chart right here, though. Backtesting resistance. Are we going to roll back over? We're at the top of the range. I don't know. We'll see. Meta is actually still trash. Yep, still is trash. I don't even know why we look at this. I think because we're expecting maybe a massive breakdown sometime in the near future. I can't remember why we started looking at Meta. Okay, so let's look at our crypto because we did some important stuff here in the last few hours. Let's look at what's happening right here. So on the Bitcoin CME futures chart, obviously we crossed 821 back to the upside. We had a false breakdown here. We crossed it back to the upside. Now we're sort of threatening it a little bit. We're still technically crossed to the upside. As long as that's happening, that is technically bullish, though we're still in a bearish downtrend. So what we're looking for is the backtest of resistance, which would basically be somewhere around like 28,000 up here to potentially 34, etc. Now, are we going to get there? Probably not. Why do I say that? because we have just spent so much energy on the daily chart coming from the bottom of the range all the way back to almost the bullish control zone, and the price action has literally gone nowhere. We're up like 10%. The last time we were at these levels, we were way up here at 31,500. So we're down like $8,000 or $9,000. Again, very close to printing bearish divergence. So how could we not print bearish divergence? Let's just say I could paint the tape. I have just $1 trillion. I can do whatever I want with it, and I can just paint the tape however I want. I can just buy as much Bitcoin as I want or whatever. I mean, in order to invalidate the bearish divergence, we have to push all the way back up and take out this high right here, because we're already so high on the indicator oscillator right here. So we already have put in a much, much higher high than that previous peak right here. So no matter what happens, the indicator oscillator is putting in a higher high. What we need to happen to invalidate bearish divergences is for price action to put in a higher high. So the indicator says we're putting in a higher high, and the price says we're putting in a higher high. Therefore, we don't have divergence. We have agreement between the two. They're agreeing with each other. They're, saying, hey, price action saying we're putting in a higher high. Indicator oscillator saying we're putting in a higher high. Everything's gravy. It's when they diverge from each other and one says, we're using a lot of energy to get where we're at, or another one says we're not using any energy at all. Look at, we're exploding to the upside. That's what we're looking for, is the divergence between the two. We're looking for the two telling us different things and then trying to figure out which one is lying. So right now, the two are telling us different things. In order for them to agree, some crazy shit has to happen. So who's the liar? How do we figure that out? Well, the last time when we got this breakdown, we saw basically the liar between these 2 points right here. So now it looks very, very similar to what's happening here. And when we get on the spot chart, it's like mind-numbingly similar. What's going on here? So let's look at our daily right now. So I'm actually, again, I don't really like going down to the shorter time frame stuff just because there's a couple days between these. So I typically like keep that stuff for more like in the group and stuff like that. Just because I could be like, this looks extremely bullish and I'm going long. And even though you would never listen to me because it's not financial advice, obviously anything could change in between, like our Wednesday stream and our Friday stream, or our Sunday stream and our, Wednesday stream, etc. So I'm going to go down to the 4 hour here and we're going to talk about what's taking place here, and actually may go down to a shorter time frame and show you what I'm looking at here. So actually, yeah, we can go to the, we'll go to the hourly for just a second. So this is what's happened with the hourly. We basically had crossed back bullish. The initial push up, we crossed everything back bullish. It was looking good. Then we lost the trend. Then again, we pushed back up, put in a higher high. Then we lost the trend. And then here we pushed up again, put in a higher high. And now we're threatening losing the trend right here. So we're very close to flipping bearish again. Now we obviously have a series of higher highs and higher lows. So it's okay for now on shorter time frames. It's okay as long as we keep putting in higher highs and higher lows. So the key areas we're watching for is, that 25,000 top. And then the key area we're watching for here is that like 21,000 bottom. So we're at 23,000. So we're looking for 2,000 upside or 2,000 downside. We're basically at a coin toss. And obviously that's what the 200 exponential and simple is telling us. Like, what is like fair value based on the time frame we're on. So then when we go to the 4 hour and we start looking at, okay, well, we've been in this massive downtrend forever on the 4 hour. Literally for like weeks and weeks and weeks, months. And now here we have confirmed the 4 hour back into a bull trend. So we're on top of the 200 exponential and simple and it's blue. We're on top of the 200 exponential and simple and it's blue. The first time, we're coming in obviously higher highs and higher lows. The first time we come down here, we retest the 200 simple. So here we come down and start retesting like the 200 exponential. The question is, are we going to retest the 200 simple again and then go higher? Or are we going to break down from here, start threatening lows? Are we not even going to get down there and go higher? We don't know. Choose your own adventure. But what I'm looking at right here is, here we have, and I'm just going to try to compare this little like wave right here to this little wave right here, and assume that, hey, there's like probably some kind of market maker, bot, or algorithm that's maybe like moving around the price, and that there's a possibility we could see a pattern, or that it might do the same thing again in the future. So we can look for how our indicators and oscillators look and then say, hey, look, it kind of looks like it did right here, so maybe it's going to do the same thing. We don't know. So when I look at this, what do we see here? Well, we have obviously the 8 and 21 cross to the upside. We're on top of 200 exponential and simple. We come down, start putting in lower highs and lower lows. We backtest the 200 exponential and simple. We crossed 821 to the downside. We bounce the 200 exponential. We try to cross 821 back to the upside. We fail that cross, and then it rolls over, and then the 200 exponential fails. We backtest the 200 exponential, the 8 and 21 is resistance, and then we come down to the 200 simple, and then we bottom in the bearish control zone with a hard buy signal. And then here we see we're in the bearish control zone. We leave the bearish control zone. We get the hard buy signal right as this fails and rolls over. And then obviously that was a back test of the blue slope line right here, which is a very reliable back test. When that fails, that we're going to get continuation of the downside. So now if we compare that to this and see, does it look similar? Well, we have a high, then we have, a series of lower highs and lower lows. We cross 821 to the downside. Once we do that, we come down almost to 200 exponential, not quite there yet. Here we bounce the 200 exponential, come back up, try to cross 821 to the upside. Here we don't quite get to 200 exponential and simple. What does that mean? People are more bullish. They're looking for an opportunity to buy support, assuming the trend is going to continue on the 4-hour chart. Therefore, they're more willing to buy above it than they are down here because they're expecting other people want to buy it and they want to get filled. So everybody rushes in and buys slightly higher than the 200 exponential and simple. And then we push up here and it actually fails. The 821 fails to cross to the upside. We get this massive, just nasty, nasty bearish candle back down. Obviously, we know who's in charge. We know who's in control. Because if the bulls could do this, they would. So either every time we see a big bullish push up here, it gets bearishly engulfed. We see a big bullish push up here to try to save the trend, it gets bearishly engulfed. We can assume that either everyone's neutral and they're just pushing the price wherever they want to be, or that the bulls are thinking they're in charge temporarily and then the bears just keep dumping on them. That's what it looks like is happening. So last time that happened, we roll down here, we come down, we break through support. So maybe this time we find support at the 200 exponential, but eventually we would expect, lower lows and then probably a retest of 200 simple, which is fine because if we come back down to like 21.7 or something like that, it's still a higher low. So we're still putting in higher highs and higher lows. So we still could push up slightly higher, which is actually my base case, is that we actually go up higher. But again, it's not like I didn't tell you that I was taking profits on my Bitcoin position literally at the highs, before we rolled over. It's not like I didn't tell you I was taking profit on it. I mean, it is what it is. We can easily re-enter now because everything we took profits on is lower than when we took profits on it, including Ethereum, which we took profits on weeks ago. So that being said, we're on the daily now. So now we see how this corresponds. So on the daily, we were in the bear trend since way back here after a rejection of 200 exponential. Roll down here, just leg after leg. And then eventually we cross back bullish, new high, higher lows, higher highs, bull trend inside of a bear trend. We expect a back test of resistance or the 200 exponential and simple moving averages. That being said, we come up here, almost lose the 821. Matter of fact, in real time, it actually was crossing to the downside, and then this candle crossed it back to the upside, and now here we are threatening it once again. So what is going to happen here? Well, we're either going to put in a higher low and then continue the upside and probably put in a higher high and start retesting some resistance, or we're going to start threatening that low. We don't know which one's going to happen. We just talked about how basically we're in the middle area of that. So there's not a lot of an advantage in one direction or the other. We see we have momentum in favor on the daily here. But, we do have a couple red histograms coming in. So a couple, buy, sell, buys kind of flashing left and right. So a little indecision taking place. Where are we at now? Well, the stochastics were at the bottom of the range right here. And now they're at the top of the range over here. And where have we moved? We have basically moved up a couple $1,000s. So again, we have to look out for that bearish divergence here. And we have to look out for a similar scenario where we basically start looking okay, go sideways long enough, and then eventually the bearish reset is done and we take another leg lower. Doesn't have to happen like that, but I'm telling you right now, I mean, everything looks like it's at either the top or the bottom. All the stuff that's been going up looks really toppy, and all the stuff that's been going down, that's been strong and correcting lately, looks really bottomy. So we'll see. Ethereum has done nothing lately, basically. So we took profits in here. It had a pullback. We had an opportunity to reload, didn't, went slightly higher, and then here we are back basically where we took profits. So that was the idea, was to basically take profits on this trade early because it led out of, into the bull run or whatever that we've had lately, and then diversify. Unfortunately, most of the other stuff has been underperforming in the crypto market. So was it a better idea, a useful idea? It was a good idea, but did it play out? Not really. I mean, it's not like we went broke off of it. We still did well, obviously, but we did extra work for basically nothing. But Ethereum right now starting to show a little weakness, much, much stronger though. Still on top of the 8 and the 21. Hard sell in the bearish control zone. Be careful here that Ethereum doesn't lead into, the bear market or out of the bull market or out of the little bull run. The same way it led out of the bear run, could lead out of the bull run as well. Bitcoin dominance, not really doing anything, just hanging out here. We know the key level to watch is at 41.46. If we're going to start ripping to the upside, though, I would not be surprised to see a big old red candle here as basically altcoins explode. But we're not seeing anything like that, so, wouldn't get too excited for that situation either. But it could happen. It could happen. Could happen. Total market cap, again, this is important. So we bounce key support, we backtest key resistance, as expected. We're, 50% of the way confirmed into a bear market. 200 exponential is already flipped bearish. 200 simple has not. It's on the weekly time frame. We saw here, we left the bearish control zone, hard buy signal, and rolled over. Is that going to happen again right here, off resistance, and we roll over? I don't know. But what I do know is that as long as we're basically oscillating between like 850 billion and, let's say 1.07 trillion, as long as we're oscillating in that range, it means that there's no new money coming in to crypto. So we might see a couple cryptos pop off or a couple cryptos dump. Some go up, some go down, some go sideways. But as long as we're in this range, there's no like quote unquote value or market cap being created. So is it just musical chairs where like the same money or the same players are just moving from chair to chair and we're slowly just pulling chairs out? I mean, yeah, that's probably what's happening right now. Again, this looks to me like we broke down from key support. We're backtesting it as resistance before we go lower. Now, it doesn't have to happen like that, but definitely worth paying attention to. So we'll rip through all these trash cryptos. Avalanche has done basically nothing in the last few days. I mean, it's had a little push to the upside. It is starting to cool off here, which isn't actually a bad thing. If it can like hold on to key levels and we see the indicator oscillators coming down, maybe it can get a leg to the upside. Solana, okay, here's the thing about Solana. With the exception of like 10 cryptos ever in existence, I don't think there's ever like been like, let me put it this way. Everything that could possibly go wrong with Solana goes wrong on a regular basis. I mean, the blockchain goes down, it gets hacked, wallet get hacked. They're like seizing people's crypto, just everything that could possibly go wrong with Solana goes wrong with Solana, and it doesn't even sell off. So what does that tell me about Solana? Probably there's like a bunch of people that have all the Solana. Like not literally all of it, but like a really, really big amount of it. Like I don't know if somebody wants to go look at like whale addresses for Solana or if somebody already has, but I'm assuming there's probably like a handful of addresses with like a massive amount of the circulating supply. Otherwise, no asset in existence could literally fail this much and have so much go wrong and just look like everything else. Because if you look at the Solana chart and then you compare it to like Ethereum or Bitcoin or something, they look like pretty much the same. So you're like, oh, okay, so nothing has gone wrong in Bitcoin recently, but Bitcoin's down. Solana has shit the bed every way possible. Every possible thing that could go wrong with Solana has gone wrong, and it looks exactly like everything else. So, I mean, one of two things here, okay? Everything is just super, super correlated, and just nobody gives a shit what any of crypto does. They just like the name or whatever, and that's fine. But, like, we know that's going to fail on long enough time frame, because just everything can't be, like, good in the next Ethereum and smart contracts, and we know they can't all be the future. So, it will be correlated at 99% till it's correlated at 0 when they fail. That's a possibility. Or this is just massively, like, I hate using the term like manipulated or whatever, but like it's technically not manipulation if somebody has like 90% of the circulating supply, but like also like, a massive whale having a huge percentage of the overall market cap, arguably manipulation. So depending on how you want to look at it. There's some fishy stuff going on with Solana. But with everything that goes wrong with it, I would never touch it. Ever again. Ever again. Polkadot, weak and underperforming, basically doing nothing. You guys know where all the trade setups are and the potentials. Basic attention token doing nothing. I mean, this thing is like flatlining here. Chainlink had a little push up here and then a back test, holding support for now. Maybe we see this complete the trade setup. Maybe not. Matic's been pretty strong overall. Still have some slightly higher upside potential. Maybe gets up here to like $1.20. I don't know. We're seeing the indicator oscillators trend down while it basically goes sideways. Potential for essentially a bullish reset and continuation of the upside. Again, we don't want to get excited, but like if all the crypto charts look like trash and then there's like one or two that look okay, if we're going to trade something, let's trade the two that look okay, because that's what everybody else is trading, which is why they look okay. Somebody's coming in to buy them. Other people are saying, hey, look, somebody's coming in to buy these. So instead of buying, the one that has a cool name like Sushi Coin or the one that makes me laugh like Cumrocket, like, why don't I just buy the same crypto that everybody else is buying? Because, like, honestly, I don't care about sushi cum rockets. Like, I just care about making money. And then they're like, oh, so I guess I'll just buy Matic because all the rest of crypto looks like trash. Oh, I guess I'll just buy Ethereum because even though they constantly say there's new updates and this is changing and that's changing and it's going to proof of stake instead of proof of work, who gives a shit? Because none of it ever happens. It always fails. It's like multiple years behind schedule. In the meantime, everything it's been trying to do, other coins like literally show up and just do better. So, is it the initial important crypto in the ecosystem? 100% it is. But like, if you ask me right now, like, hey, is Ethereum still going to be like top 5 20 years from now? I don't know. Probably not. How many things are still top 5 20 years later? I mean, like in anything. I mean, it's just the probability is just not good. Especially if you're looking at something in like technology space. With which crypto, I definitely think cryptographics and blockchain technology is the future for sure. But like, do I think that means the cryptos have to succeed that we have now? No, most of them are trash and go to zero. Even some of the ones that are good probably go to zero. Think about how many companies historically have been phenomenal companies and then eventually went bankrupt. Lots. Way more than you think. And the difference is that like, those companies get bailouts from like governments and stuff. The cryptos have to, basically like suckle to the teat of like SBF if they want to bail out. I don't even want to know what he makes them do to get that bailout. So BNB, Binance Coin. So hanging out at the top of the channel right here, looking like it wants to like break out of this little range right here. It's pretty technical. Could it be drawn slightly different so that it's not a breakout? Sure, maybe. I don't know, though. Who even cares? I mean, realistically, the target is probably like 340, something like that. At that point in time, I would be very, very skeptical that it goes higher. And I would be really, really careful on this one. Matter of fact, it probably just loses like 40% and goes straight back down. And we know macro. This, to me, if you show me a chart and said, show me 1,000 charts and said, pick the most dangerous looking one, this is the one I pick. This is the most dangerous chart in crypto, in my opinion. The downside potential on BNB is like still from where it's at right now, like almost 90%. And if you don't know why, well, guess you'll never know, but you probably do. We've talked about it a bunch of times. So XAU, ZAO, gold, looking at it on IDC. So we have the 821 crossback to upside. Look, this to me is just dead cat bounce. I mean, again, like when we identify an area as key support, we come down to that area and then we bounce it perfectly. Like I get bullish at support and then I get bearish at resistance. So we're back testing resistance now. So it seems very likely that at some time in the near future, this back test fails and then we go much lower. We are still inside of this channel for now. We're basically at the top of the channel. We've been operating perfectly inside this channel. A bunch of times resistance, a bunch of times support. And then also we're back testing like key fibs and all these key levels. The breakdown in green right here, etc. So again, looks like we likely roll back over here, but not crazy to think that, all right, we don't need this arrow anymore. So can I steal this? Yeah, okay. So not crazy to think that if we did get a breakout from this level, that we would basically get the measure move from the bottom of the channel to the top of the channel. and maybe take us back up here to like 1867, 1875, something like that. But we know on longer time frames how bad the gold chart could potentially look, because this just looks like a dead cat bounce right now, back testing what was resistance. And then, weekly looks okay, could bounce here, could have a nice move up, but the monthly looks just so dangerous. So dangerous. We're very, very close to the monthly chart having an 821 cross. And a matter of fact, we need to get back on top of like 1800 to 1825 and just consolidate there and then start getting some momentum to the upside. Because the 200 simple is crossing above the 200 exponential on the monthly, and we know that's never good. We're losing momentum. We're back testing the blue slope line right here. The last time we back tested blue slope line was right here as we rolled over the 821 cross, and then we capitulated and went into like a decade bear market. We're about to get the 821 cross. We're rejected off the back test right here. Big knife stab to the upside. I mean, just everything about this chart just says like, hey, I know everybody's like really bullish on gold, like fundamentally right now, and like things are scary and there could be wars and the fiat currency is garbage and commodity bull market and invest here and there. But I'm telling you right now, I love gold. I love physical shit that you could put your hands on. Okay, I love it. But this chart literally has not looked this potentially bad and scary since 2013. So 10 years ago, right before we capitulated, the chart looked almost exactly like this. Almost exactly like this. Matter of fact, this is where we're at right now. We can see we broke down below the 8 and 21 right here. Right as they're getting ready to cross, we get a little itty bitty green candle back test right here, and it fails. And then we literally capitulate right after that. That's literally where we're at right now. So if I'm wrong, which I hope I am, because I have gold. I mean, but I use it as a savings account. I don't plan on selling it. But, I mean, I hope I'm wrong. But I'm telling you right now, this chart looks like about a month from now, we're going to be substantially lower in the metal space. And silver, again, made it down to the teens as expected. Hit our targets. Bounce back up, back testing resistance. Just does not look good. Does not look good. Again, we're just going to, I'll skip over the weekly because, well, we can look at it for 2 seconds. Looks terrible. Back testing the 200 simple. 200 exponential already bearish. Looks like we're confirming into a weekly bear market or about to, getting close to. And then if we go over to our monthly chart, again, we're back testing the 200 exponential and simple. The 200 simple is on top of the 200 exponential. Just looks absolutely horrendous right now. Now here we had a ton of room to fall before we got to 200 exponential and simple. Here we don't. We're at it. So that means basically if we go any lower from where we're at, in the high teens, we're back below them. And then it's just a matter of time. The longer we spend underneath them, the more bearish. And we haven't had a bearish, essentially like 200 exponential and simple at the same time since like late 80s, early 90s. And that was like the period we stagnated in for basically, 20 years. So does silver eventually break out to new all-time highs? I can say with certainty, yes, silver will put in new all-time highs. Now, if you want a time frame, remember we said that's when it gets difficult. We could call direction. That's not that hard. But time frame is difficult. So if we're going to say, hey, I can guarantee you with 75% accuracy based on my opinion and nothing else that silver will put in a new all-time high. And then you say, okay, 75% chance. What's the time frame? In the next 100 years. So is that useful to you? No. Who the fuck? 100 years? That's not useful. We'll all be dead in 100 years. Or little brains operating like cybernetic bodies. But either way, who gives a shit about gold? Who gives a shit about silver? So, in my opinion, it's just not the time to be getting excited about these. Now, that might change. Now, you might live in a country where your gold chart or your silver chart in comparison to your currency in your country looks way different than mine does. And a lot of them do. A lot of them do. There's tons and tons of countries that have gold at new all-time highs, record highs. Silver has put in new all-time highs, etc. There's lots of countries. And if that's your country, that's great. But for me, it's all relative. And then obviously, I live in the U.S., so that's most important to me. And then obviously also, regardless of where you live, the United States is the world reserve currency. So it's got relevance to everyone. So pot stocks, ACB had that big breakdown. I told you guys I've been just like slowly dipping my toes in these things just because they're so beat down. Normally don't like dollar cost averaging into downtrends just because they tend to continue. But these have been going on forever through like the most ridiculous like bull cycle ever in existence in like every other asset. These things have just melted down for years. So, I would say, like in the words of Kathy Wood, they're in deep value territory, or they go to zero. Which either way I'm okay with. Obviously, I would prefer they go up. But we see a series of higher lows right here. 821 crossing back to the upside. The key area to watch, a break above $1.66. And then at that point in time, we start looking for like gap fills. We start looking for a retest of a 200 exponential and simple, where we likely go lower from. But let's just say crazy shit happens and you're like, oh, look, I came back from the future and actually ACB goes under $1. And I'm like, wow, that sucks, but also doesn't surprise me. And you're like, but actually, it retested 200 exponential and simple before that happens. And I'm like, oh, really? That's crazy. I mean, it's a 142% move before it just goes way lower. Maybe goes to zero. I don't know. But there's some potential here for some pretty aggressive upside moves. Now, is that going to happen right now? Not necessarily. I'm looking at some trade setups. I'm paying attention to it. And the momentum and what could potentially happen in the rest of the market. But the pot stocks look like they're setting up for something. Maybe like bad earnings, but it was already priced in. We'll kind of see. Again on Tilray, it doesn't have to happen. We don't have to get an aggressive move to the upside, but we're talking about like 66%. Typically happens in a couple little daily candles. And then sells off, new lows. Terrible. Which I expect. I fully expect us to go to new lows. CGC, Canopy Growth. So we obviously have this key resistance right here. We come up slightly higher, fill this gap or whatever. But again, the real trade we're looking for is like some kind of backtest of resistance or the reversion of the mean 200 exponential and simple. Talking about 150% move, probably underperforms, maybe never even happens, but worth paying attention to. Again, not mad about holding some of these long term, but fully expecting them all to go to zero. So CCJ, so we're starting to see a little weakness in the uranium space. You guys know how I feel about this. This chart looks okay. We're hanging on to support for now. But URA looks a little more like the space in general. We're basically like backtesting 200 exponential and simple, confirming into a bear market. As expected, still massively bullish on uranium, but looking to reload at lower prices. GSG, commodities. Okay, so we've been talking about this and how high this bounce was going to take us to. Where you would look for take profit areas, where we would look for potentially, topping out, and then, what could essentially be the end of the commodity bull market. Now, we don't know for sure if this is the end of it, but we're seeing some warning signs. Obviously, what we were paying attention to was how high of the fib retrace we get. Obviously, we needed to get over the 236. 382 is the minimum. 0.5 is the average. 618 is, the more bullish before we go lower. Now it's important, it looks like we've topped out. The most important thing is, do we put in a higher low than this? Let's say this pivots right now. It could easily come back up and hit the 618. Let's say it doesn't, and we take out this low right here. It looks like we probably have already put in a peak, and we go lower. If we break below 200 exponential and simple, we look at the macro 236, the ascending support line, and then we'll look for at least an initial push back up, and then rejection as we confirm it to the bear market. If we bounce here and continue just putting in higher highs and higher lows, we'll continue getting more and more bullish. Until obviously we break out. Overall, still very, very bullish on commodities long term, but I honestly think commodities and energy, the trade doesn't have to be done. Either one could easily put in a new high still, but we're not trying to like get the little crumbs, okay? Like I don't know if anybody has kids. I'm assuming some people have kids. Like your kids like open up the pack of like Oreos, okay, and they like eat the cream out of the Oreos and then just like stick the two halves together, the two cookie parts, and just like leave it for you. That's how we trade. Okay. I don't care about the little cookie leftovers. Okay. We want that 80% in the middle. We want the cream of the trade, the cream of the crop. Okay. We want that Oreo cream. And then we'll put back the cookies. Maybe we'll eat a couple cookies here and there. It's okay to call the bottom, call the top sometimes. That's our cookies. That's okay. But the majority of the time, all we're trying to do is just use our teeth to just scrape that sweet, sweet Oreo cream and then we're just going to put it back for some other sucker. So, and that's usually when we're taking profits, somebody else is getting in for that last little like 5, 10, 15% of the trade, and then usually ends up underwater. And you know what? What do you expect when you're eating somebody else's leftover teeth scrape D-cream Oreos? That's what you expect. You expect it. So that's how I look at this. So, there's your Oreo analogy for what to expect. Next we have copper. So we were looking at copper and seeing about if it confirms the 821 to the upside. This is CPER copper index. A couple other ones, but they all look basically the same. Had a very, very aggressive sell-off. I mean, disgusting sell-off. And then basically a pretty aggressive bounce. And now it looks like they're threatening the 821. So if this crosses back bullish, I'm looking for a back test back up to like 25. If it rolls over here from here, I'm looking for new lows. And then if we get down here towards the lows, I'm looking for, higher lows and then eventually higher highs, etc. A little momentum building up right here. But again, this is a disgusting sell-off. And we see how nasty. Look at this bull market play out exactly as we talk about all the time. 200 exponential on top. 200 simple crosses over. We threatened the highs a couple times. We actually put in a slightly higher high right here. This is distribution. This turns out to be a throw over in our Wyckoff type 2 distribution pattern. We then use that momentum to come all the way to the bottom of the range. We actually retest the bottom support level right here. Back test the 200 exponential and simple as resistance. They act as resistance. We confirm into the bear market and then we melt down. This move right here, in my opinion, if we look at the Dow Jones and the S&P, we are very, very likely, or at least there's a high possibility that we're doing this right now. We're back testing the 200 exponential and simple, trying to stop this next big leg down. And then even if we're not, maybe we're over here and we're going to back test it again to try to prevent another big leg down. But when we get to the 200 exponential and simple from the bottom, we do not get bullish at those levels. We are selling at those levels because that was our target from the bottom. So we're deciding, okay, is our target going to be that for copper or not? Well, we don't know quite enough yet. So we're still doing our research, and by doing research, I mean we're just looking at the breadcrumbs. JJC, another just copper one. Again, looks exactly the same. The only reason I'll pull up a couple of these typically is when I was watching a couple for potential entry into the space, and I want to see what a couple of these look like in case one of them's lying to me. If I only look at one, I don't know for sure. If I look at 2 or 3 or 5, I can tell more accurately what the space looks like. A perfect example is uranium right now. A couple of uranium stocks look really good in comparison. A couple of uranium stocks look really bad in comparison. And the majority of the space is like right in the middle. UTZ. So this was one of the trade setups we talked about here recently. And, this was essentially this is best case scenario right now for like Dow Jones, S&P, pretty much everything. Obviously, we're way deeper into this, so ignore how long has gone by, but pay attention to what happens in relation to the 200 exponential and simple. 200 simple gets on top, we break down, we back test, we fail to get back above 200 exponential and simple, we enter into a bear market. We're in that bear market in this case, for the last year or so, and then here we start to do our reversion to the mean retest. We play these a couple times, but really we're trying to short resistance. So then here, let's say I got hip to this from down here, which I didn't. It was brought to my attention by one of the group members once we were like already back in this range right here. But let's say we got hip to it right here. Our target would be the back test of resistance to 200 exponential and simple. So we would be sellers into this range. And then what happens? Well, we sell into the range and then it actually goes higher and consolidates. So then it's okay to be a buyer again. So you're buying slightly higher. Who cares? I don't care how many shares of UTS I have. All I care about is the position size. So in reality, we don't care that we're buying slightly less stock at a slightly higher price. What we care about is how much risk we avoided. Because a very large percentage of the time, we're going to hit the 200 exponential and simple, and then we're going to roll over. A very small percentage or slightly smaller percentage of the time, we're going to hit the 200 exponential and simple, we're going to break through them, we're going to consolidate, and then we're going to go higher. So that's what we were looking for on this setup. So the same way that if we would have been, hip to this trade back here, we might have had some kind of trade setup like this off of key support levels with the target of the 200 exponential and simple right here. And we would be basically like locking in our 25% gains right here, taking profits. And you're like, well, that doesn't make any sense because your entry is the same place you sold at. Well, sure. And that's completely okay. And actually, that's ideal because this is the reason this is the reversion to the mean. And it's so important is because we can go so little in one direction or the other before we find out if we're wrong. Once we start breaking above the 200 exponential and building up momentum, we're wrong. That was a good take profit, but we're wrong that actually now we might go back into a bull market. And the same way, if we sell into resistance right here and then it goes down, we're right. And either way is fine. The bias is obviously to the downtrend, and then we can break through that bias and be wrong. And then actually we can just come up here and put in a lower high and then just go back into the downtrend. We don't know what's going to happen, but obviously we're able to identify what's happening with the group member, obviously pointing this chart out specifically. And then we're able to throw this little trade setups in play. And now we can see how they're playing out. So now once we consolidate above the 200 exponential and simple, they both flip blue. We're able to buy the pullback as expected, as we discussed. And then you're able to get the, initial trade setup to the 382 and 0.5. After that to the 0.5 and 382, yellow and green accordingly. And then obviously we have some other targets to the upside. But this now, until we see otherwise, on a daily time frame, has confirmed back into a bull run. So if you're looking for an opportunity, the best time to get into a trade is right when it flips into the blue like this on a daily or whatever time frame, because that's the beginning of an uptrend. Now, we don't know we're going to get another massive uptrend like this, but we know that if we're involved in stuff when it looks like this, and we're not involved in stuff when it looks like this, that we're going to do exponentially better than if we just buy and hold at random times, or we just dollar cost average and don't trade or whatever. So that being said, we're trading with the trend. The trend is flipping bullish again. Whenever you guys see a chart that looks like this, by all means, point it out. Sometimes there'll be some other key subtleties on why it's not looking as good or looking better. But at this point in time, it seems very, very likely we're about to get our initial target of that $20. At some point in time, we could easily slightly underperform right here. Again, like always, we want to lock in gains, even if we don't hit our target perfectly. Because what we expect to potentially happen is, at some point in time, we expect one more pushback down, and then we want to see this 200 exponential and simple hold. Initially, when we break through, we'll get an initial quick test, and then it gets bought, and we go. But realistically, we'll get a back test. Now, sometimes you won't even touch the 200 exponential and simple because people are just so bullish, they cannot wait to buy it as the price comes down. And so that's why you don't want to get, you don't want to miss the opportunity by having just a single entry at the 200 exponential and simple. Maybe you want to buy a little bit front run, then at the 200 exponential and simple, then slightly lower, etc. But the fact of the matter is, the probability of this trade setup goes exponentially higher now, because now we're confirming into a bull market and we have a 3.3 to 1 risk reward trade setup. As where normally, if we were still in a bear market, 3 to 1 risk reward ratio is the minimum we would take. If we're in a bull market, 2 to 1 risk reward minimum is the minimum we would take. Here, we're in a bull market and we have 3.3 to 1. So that's juicy. We want that for all our trade setups. The only thing better than that is a 4 to 1 in a bull market, or 5 to 1, or 6 to 1, etc. So nice trade setup. Anytime you see charts looking like this, by all means, point them out. The Ford one, I just wanted to bring this up. Taking profits here as we basically confirm into and backtest into resistance right here. Confirming into a bear market. Again, there's possibility we start closing above, basically like 17 or whatever. And, we got to respect that there's a possibility we're going up here to put in new all-time highs. 200 simple is on top. We did confirm into a bear market. We had, a respectable pullback, I guess. I was expecting us, honestly, to go deeper. I don't see, super clear bounces off of fibs or anything like that. So we'll see. Very close to rolling over right here. Or again, if we start to consolidate up here above our macro fib, the red 786 and the green 236 and the 200 moving averages, I'll just re-enter around this area expecting higher prices. So, but again, I think it's very unlikely that we see 5 good charts in the market and then everything else just continues to just be horrible. I think it's going to happen together or not. We're either going to rally together, everything's going to go back into a bull market, or we're going to sell off together and everything's going to go back into a bear market. And we're going to see, dollar strength and yields bullish while everything else is bearish, or vice versa. Or maybe we see a macro, twist or something happening. But right now, you know, we were able to call out support perfectly. We were able to time everything perfectly with July and this most recent rally. Now here we are into August. There's definitely still potential for some legs on this rally, but we're hitting targets left and right on trade setup after trade setup after trade setup. So I really think now is the time to just take profits, de-risk, be cautious, and then we'll look at what comes into the future. So still tons of trade setup opportunities. I pointed out a couple in the group specifically. I mean, the majority of you guys are group members anyway. But just to, I don't love the setups. We could pull them up real quick, I guess. I think we did pretty good on time, right? Oh yeah, I ripped through today. Give me just 1 second. I'm going to pull up a couple of charts. Now, one thing that can be an effective strategy, but you have to be ready for, because it can literally backfire at any time. One thing that is an effective strategy is when we see essentially a situation like we're seeing play out where the market is kind of cycling through. We're seeing a bunch of things are bullish and having like those reversion to the mean trades or plays, and a bunch of other things aren't. Some things are overperforming like Apple. Some things are underperforming like Meta. And then there's lots of stuff in the middle. So the thing is, if I'm right and this all rolls back over and we go into a bear market, it's basically like a game of musical chairs where you're like trying to get that last little bit out of the market, that last little move to happen before the market rolls over. If I'm wrong and we go up from here, you're already long. So you eventually get your nut. You just probably underperform because whatever's been strong is probably going to stay strongest. But either way, we can benefit from this, obviously. It's just a matter of we got to be ready for the rug pull, basically, at any point in time in any of these trades. So we're going to look at Target first. So we saw Walmart and Target basically had like that capitulation move. And then Walmart actually melted back up and closed its gap like right afterwards. And, you know, while I'm actually like slightly more bullish on Walmart, well, obviously now in hindsight that it had that move, but like just in general, like fundamentally, Walmart over Target, like, you know, Walmart is just like a tiny little like half a step like above Walmart or just slightly above Walmart, but essentially they do the same thing. So if we go into like, you know, full on like nasty bear market, like recession or whatever, Walmart is probably a better place to be than Target. But honestly, Walmart and Target are probably better than, you know, most other places in the same industry, with the exception of something like the dollar store. So that being said, what I'm looking at right here on Target is, we talked about this macro setup a while ago, okay? Like way, way long time ago. Like I don't think I brought this up on stream for like, I don't even know. I mean, months ago, since back in before the end of the year or something like that. And then again, like mid-year when we peaked out right here, we were talking about it. But essentially, this is our macro look at Target. You know, the 1, the 2, the 3, the 4, and then that was our 5. Obviously, a truncated wave 5. Like, pretty aggressive top. And then we saw some various divergence on different time frames or whatever. You know, we pulled back to the 236. We overshot it almost to the 382, lower high, and then we came down, you know, to the 0.5 in white and then the 618 in white. So now we've came back down to the 618 in white, which the 618 is just the wave 5 right here. And then the white, I'm sorry, is just the wave 5 right here. And then the yellow is the full 5 waves. So we basically hit the 236 just slightly off of it right here. So that confirms basically, okay, we probably are actually correcting this full 5 waves. And then we see some clear interactions with the white fibs, which you would expect because obviously we're correcting the 5th wave. So the fact that we bottom at the 382 in yellow right here and the 618 in white, again, these targets were in place way, way long time ago. The fact that we bottomed exactly where we were expecting by like a wick or two is amazing. Now, that being said, I actually I have like 2 separate chart setup, trade setups, computers, everything. Well, a couple actually, but for like trading and streaming and everything, all my setups are completely different. Okay. So I actually didn't even see this setup specifically, this chart specifically, and I was looking at it on my other setup. So this is actually a much better trade setup than the one that I took, presented, etc. And it's almost done now. But that being said, when we got the gap down here, what we're looking for is we're basically at that gap level. So anything higher from here, we're likely to come up and fill that gap to backtest at least the 200 exponential or 200 simple. And then obviously we have key fibs right here, which was our initial target for the trade setup. And then obviously, you know, the backtest of the macro, the white fib as well, right here. So 200 simple, 200 exponential, and then our 2 fibs right here. So not a great trade setup if we're just going to the fibs right here. But if we're potentially going to fill the gap, which is what we've seen on, like, you know, we saw Amazon have like a big gap up, backtest at 200 exponential and simple, etc., etc. So what we would be looking for is basically a breakout from this level. Backtest of, hang on one second. Backtest of the 200 exponential, simple, and the fib right here. So what we're essentially looking at is something like this. Now in this case, it's only like what, 2 to 1. What did I do? I thought I had the stop a little tighter than that. Oh, is it really that much of a difference from? Okay, so yeah, it was 8.86 to 26. It's still like okay now that it like crept up just a little bit right here. But it's only like 2.6 to 1. It's crazy how much it changes with that little percent move right there. But essentially this is what I would basically be looking at still, which is the gap fill close of this. Now again, does not have to happen. The market could just roll back over and that's it and everything sells off. But if we continue to see the market kind of move up and some of the weaker stocks finally start pushing up and, you know, breaking through resistance or everything, I mean, we're basically at the point where if this thing goes any lower from here, it's probably rejection and we don't care anymore. If it goes any higher from here, you know, it's literally just an air pocket and it probably just shoots up that 26%. So even if we wanted to tighten up the stop loss a little bit or enter into this late or however you want to do it, there's some potential there. Now, again, it's a coin toss, slightly favorable risk-reward ratio depending on where you enter or where the price gets up to it. But it's worth paying attention to, as a lot of times we'll see these things pop off and it will be like 1 or 2, you know, candles and the trade has played out. And basically the exact same trade setup right here on Netflix. So obviously I got extremely bearish on Netflix back here. And then I was talking about how it could potentially hold on to this level. And then again, I got extremely bearish when we started closing below here. And then I was able to actually like call that capitulation move. Now we broke down further than I thought. We were expecting to hit that 236. We, you know, capitulated, back testing the 236. I eventually expect us at the 382. Because once we lost the 236, it's nasty. I think this is the back test before we go lower. But that being said, again, we have a very similar setup where essentially we broke down and just had this gap. So I don't, you know, again, you know, I don't know how long this little push-up's going to last for. Maybe it's already over and we're getting ready to sell off. Maybe there's only a couple days left. Maybe the weak stocks never hit it. Maybe the, you know, strong ones keep running. We don't know what's going to happen. But with the nice risk-reward ratio on Netflix, there's some potential here. So we obviously have a recent little like swing low right there. After that, it's basically just the lows. So we're not looking to go by the lows down at like 170. But just this little like nub of a swing right here, a break below the 8 and 21, or losing like this key support right here, the previous high. You know, if we start closing a daily below that, I'll get out 8% stop loss. Again, 47% upside just to close the gap and get back to 200 exponential. We could go slightly higher to 200 simple to that key resistance. Again, wouldn't want to get too excited on this stuff, but we're talking about like 46 to 72% upside. In this case, it's a 5.7 to 1 risk reward ratio, 8% stop loss, 46% upside. Counter trend, we want it at least to be a 3 to 1 risk reward ratio, and it's 5.7 to 1 risk reward ratio. So substantially higher than what we would need to see. Again, this could easily just roll back over and fail. That's completely fine. But we could literally be 1, 2, 3 days away from, quick 46% gains. So not my favorite type of trade right here. But it's reliable enough that if the risk reward is there, it's worth taking a shot on, especially when you're just playing with the market's money after like a lot of our more reliable like assets have played out. Now, Target and Netflix, like 2 companies that I want to like buy a position on, and I'm just sure that 10 years from now they're going to be bullish, or 20 years from now they're going to be at new all-time highs. I mean, not necessarily, but like, I mean, honestly, like Netflix and Target, are they probably still big players, 2 years, 5 years, 10 years from now? Yeah. But I mean, I'm not looking to just buy a position and sit on it, because I expect them both to go much lower. But if we take a little scalp or something like that, make some quick gains or something, leave a little bit of the market's money, whatever, or just log it and then later want to get back into this, that's fine. I would just much rather be speculating on something like Netflix or Target for a move like this than something that doesn't have like, revenue, or doesn't have earnings, or isn't profitable, like however you want to look at it. Like, I'd much rather be speculating on something like Target or Netflix over something like, I don't know, one of Kathy Wood's like top picks. So we'll see. Both these trade setups could easily fail. Again, the longer this little like rally counter trend plays out for, the more likely it is that we start seeing our trade setups fail, because the ones that were strong and good and the best were the first ones we took. So as we get further and further out on quote unquote like the risk curve, so to speak, we start like taking less and less reliable trade setups. They may still have good risk reward or good probability of success, relation, etc. But like maybe just that chart is worse. Like if we have one chart and it's phenomenal, and then we have another chart that looks like it, it's postured like it, but just looks a lot worse, the one that looks good probably plays out better or more often than the shitty one. So that's what we look for. We look for the best setups first, and then eventually some of the other ones are still sitting there and we're like, maybe I'll take a shot with like a half lot or something like that. So that being said, I think that's it for our charts today. Jump over in the chat right here, cut up for a second, and then probably just going to go ahead and wrap it up there. What's up, Yoda? Good to see you. May the force always with you be. Late night it is. God, the Yoda speech like confuses me. If awake I am not, then slept to your beautiful voice I have. Hey, thanks, man. Appreciate it. Eli says, let's go. Thumbs up. That's right. Eli says, just loud enough and crystal clear. Excellent. Thank you, sir. I'm glad you weren't like, it's muted. I would literally have missed it for the last hour and a half. Calma Betty says, war up. Crypto Trend Trader. What's up, brother? Good to see you. Michael Slide, because he knows what is coming. Yeah, what a loser. How to Lose $1 Billion by Michael Saylor. First, you have to borrow it. Calma Betty says Bitcoin 9K. Jay Hoff says nobody thinks they're a bad driver either. Man, that is so true. Everyone thinks they're a good driver. I'm like, if you're not sure if you're a good driver or not, like when you have passengers in your car, just like look at their level of comfort. Okay, if they're like grabbing a hold of stuff or seem like a little sketchy or like won't take their eyes off the road, you are a shitty driver. Like that's a fact. Cool Sheet says, what do you think about Biddy regaining the weekly 200? It's like whatever at this point in time. Geo Luke says, in regard to time frame, Crypto Trend Trader, do you have an opinion on tools like Fibonacci spirals or time cycles? I have the tool in my chart software, but I've never really looked into them. All right, so here's the thing about time cycles and Fibonacci spirals and all that stuff. They're useful at times, and in hindsight, they can be very useful, or you could say, wow, that's amazing, look at how beautiful this is. But as a predictive tool, they're very difficult. And the reason I say that is because we talk about, earlier in the stream, how time is just adding in an extra variable. So like it's easy to figure out an equation or easy to figure out like a simple like solve for X or something like that. But when you introduce Y into the equation, it can get much more complicated. So, you know, if X you're solving for like, hey, does price go up or price go down, you know, and then Y is like in what time frame, it makes it much, much more difficult. So like with time cycle analysis for Bitcoin, like the 4-year chart, 4-year time cycles, it played out beautifully. And we were able to predict in advance, like roughly when the top was going to be. And again, it played out beautifully, and maybe we'll be able to do it for the bottom, etc. But it's very, very difficult. And it's only, I shouldn't say only, very often with time indicators, or, you know, like the examples we talked about, very, very often they look great in hindsight and you say, oh man, that's beautiful. Look at that. Oh, it's like clockwork. But it's very, very hard to use them to actually trade off of or to benefit from. And even when you do see like a key level for a time cycle analysis, or like a, you know, if you're doing like the time spirals, oftentimes that will identify like a key swing or something like that, but it won't tell you, you know, if it's going to break bullish or bearish. It doesn't tell you that. And realistically, almost every time I've ever seen something with like time spirals or fibs or whatever, regular fibs identified the same levels with either fib extensions or fib internal retraces or whatever. It's just what it is what it is. If you see something that's very cyclical and you can use time cycle analysis, by all means, go for it. Fib spirals, sure, they're fun to play with, but I would just look at that as just another tool in your belt to look for confluence on. But under no circumstances would that ever be like one of my like top indications or like top tools. Next we have Ralph Smith says, nice call out on the DXY 3-strike pattern. Yeah, for sure, man. Angel says, hello, good to see you, Angel. J Hoff says, can you look at big lots really beaten down and still doesn't look great, but something I would think would do well during a recession? Yeah, the weird thing about big lots is they like changed their whole business plan. They're not like what they used to be. Arturo says, in the hizzy, listening to the market shizzy. I know that's right. Parag says, amazing stream. Can you cover DraftKings? Gio Luke, okay, that makes sense. Thanks, great stream. Yeah, for sure, guys. For sure. Okay, so what'd you say? Big lots and DraftKings? All right. All right, so big lots. Let's zoom out on a little longer of a time frame here. Okay, so on the monthly, been in a strong bull trend, and now it's very clearly in a monthly bear trend, or threatening a monthly bear trend. We're below the 200 exponential. The 200 simple is on top of the 200 exponential. It is still blue for now, but the 200 exponential is flipped. The 8 and 21 are bearish. We're accelerating to the downside. We're in the bearish control zone. All red histograms below the zero line and red slope line. So this is a horrendous chart. I mean, this is just like disgusting. Now, it did put in a new high in 2021. So that is good. But the position in relation to the 200 exponential and simple is terrible. So if we take a fib from the bottom of that 2020 high, or low, I'm sorry, to the 2021 high, we're below the 618. This is an area you would expect to find support at. It's not like super technically trading. Well, I take it back. Here we break down from the 236. This is strange. Rather than breaking down to support and then finding support and then breaking through support, here we break down below support, retest it as resistance, break down at support, or really ignore the 382 and look at the 200 exponential and simple. Break down below support, backtest it, get rejected. Break down below the 618, backtest it. So instead of it acting as support every time we come down to these key levels, we just shoot straight through them and then it acts as resistance. So that's not good. It means the market has no faith in these levels. Now, I wonder if, yeah, I would stick to that, honestly. I wonder if we could do something with some of these lows and see if anything looks important. I mean, that's just going to line up with the 200 exponential and simple. So, you know, that's obviously already an area of interest. Losing that led to this capitulation. The only other real thing we could do is go from like this macro low, something like that, and say like, hey, maybe there's going to be some kind of monthly support. Now, it's only 2 touch points right here, but, you know, one goes back to 1989. So, you know, anybody that looks at a long-term time frame chart on this is going to see the same thing we're seeing. So it seems likely that we would find support if we get down here. So, I mean, honestly, though, you're like full on trying to catch a falling knife on this one. Because even if you say, well, I'm going to buy the 786 and the support, I would just assume we're going to get some massive wick outside that. I mean, this looks like trash. There's really no other way to look at it. I mean, the fact that it put in a new all-time high right here is good, but at the same time, it's like would that have happened? Man, this is such a tough one. Because it really should be more bullish than it is. Because it put in that all-time high. And it's just putting in higher lows consistently. But it just looks really bad on every time frame. The monthly looks terrible. The monthly looks like we're about to confirm into a monthly bear market, which is not good. The weekly already confirmed into a weekly bear market a while ago. And since then, it's down 50%. And then, I mean, the daily, you know, you're like backtesting resistance. You have a little bit of bullish divergence, but I mean, where's that going to take you to? I mean, there's nothing here. You have to wait for some kind of momentum shift, in my opinion, on something like this. Otherwise, you're literally just like catching a knife with a very low probability of success. I would at the absolute least, the 821 have to flip back bullish. And then it's like, I would just set my target as like the next fib up, which is $6 higher. It's 33%, which is great. But I mean, let's say you got to get on top of like 2160 first. And then maybe after that, you can try to get to like 35. But I mean, this is full on danger zone. I mean, you're literally trying to catch a falling knife. If anything, I would just keep this one, set it aside, and just look for that area to get hit. And if we get down to there, and then the 8 and 21 start crossing bullish, and we look like we're finding support, then I would start looking for a bounce. But I don't know if I want to buy just like a free fall right here because we got a little bit of a move back to the upside. There's no way. And like fundamentally, I mean, maybe it'll do okay. But I mean, I don't know. This chart looks so bad. I mean, there's not a lot of things. I mean, we would have to like get into like the like earnings and look at the balance sheet and everything. Look at the actual fundamentals of this. But the technicals on this are fucking disgusting. I mean, this is terrible. This is one of the worst charts that we've seen. Absolutely horrendous. I mean, there's not a lot of things on the monthly that are this close to confirming into a monthly bear market. And of all the things that are this close to confirming into a monthly bear market, I don't think like any of them are down 40% from that level. Like there's a bunch of them that are like right here, like trying to fight to like stay alive, or a couple of them, I should say, but like nothing this far down. So, I mean, that's on you, man. I can't endorse anything to do with this chart without at least looking into like some kind of fundamentals further. So DraftKings, so it's been a while since we looked at this one. So that was actually backtest of the bottom. So the bottom to the top, retrace 100% of the way. So this thing literally, anybody that ever made gains in DraftKings that didn't lock them in, came all the way back down to negative. What a just complete trash bag stock. No surprise. I mean, this thing had a million opportunities to be successful, and it sucks. In hindsight, should this have been drawn like slightly different? Yeah, it should have. Sorry, I drew this so long ago. I mean, I probably drew it like way back here. Yeah, I think that looks way better. So that yellow resistance, the top of the channel right here, once we broke through that is when this would start looking like good. So we basically hit it, break through it, try to hold it as support, and then put in a new high right here, and then a new low, and then we get the breakout. So the breakout is basically that 1450. So the move is to backtest the 200 exponential and simple. I mean, the only problem is the move has already happened. So you got to be looking for these things in advance when they break a descending resistance, or when they cross the 821 back to the upside, or when they take out that previous high or are threatening that previous high, because there's probably not a lot of meat left on the bone here. So it would have been a 52% upside with 22% downside. So even if you took the local swing right here, that one right there, and say if we break below that, we lose 821, I want out. 13% stop loss with 52% upside. The problem is, if you're not already in this trade, 31% upside, 25% downside. So then what are you going to do? You're going to say, okay, if we take out the low of the last daily candle, I'll get out of the trade. So it's 8.5% downside, 31% upside. So it's 3.6 to 1 breakout trade on continuation. And then if you close below that previous high, aka this daily low, you get out. Not the way I like to trade at all. In my opinion, if you miss your opportunity, you just pass and wait for another one. But that would be the trade that you'd be looking to get into. Or arguably, if you were bullish on DraftKings back here, when you hold this as support and then you come up and then you put in that higher low, or if you backtest resistance as support, depending on how bullish you were on this. I mean, I'm not bullish on DraftKings just because there's just so much competition in the space, and I don't know. I think overall, like, probably gambling does okay, like in like a bear market or in a recession or whatever. Historically, it's just so hard to pick, because it's like, really, is it going to be online gambling? Is it going to be in-person gambling? Is it going to be DraftKings, or is it going to be, Bodog? Like, I just honestly don't know. But on this one, I would say it looks okay. The trade setup likely plays out, but you're probably just too late to the party. If you're already in it, you probably got a little ways to run. I would look at that 618, the 200 exponential and simple, as targets. We also see the 200 simple the same way we talk about it here. When we're losing momentum to the upside, when the 200 simple crosses above the 200 exponential, we're topping. And then here we put in a lower high and it rolls over. We lose momentum. So here the same way, when the 200 simple, which is pink, crosses below the 200 exponential, it's essentially the momentum running out. So that doesn't mean we don't come up here, backtest this, and then go lower, and that's it. It's the same as when we put in a higher high after we, backtest and the 200 simples on top, and then we put in a higher high. But it typically means the trend is like coming to an end. So is it possible DraftKings puts in a new low, and then the trend actually is over, and then from then it's back into a bull market eventually? It's definitely possible. Is it possible this thing just goes much, much lower, and this is just a fake out and the 200 exponential just accelerates to the downside? Definitely possible. But it's worth noting right here that the momentum is gone, obviously, as we're seeing what looks like a short-term bottoming pattern. In hindsight. But, this just looks like everything else pretty much. There's so many things that were in one of these, like descending resistances, breakout, Polkadot, like tons of crypto stocks, etc. So this is always a nice setup to master and get used to. And we were talking about back here the potential for this to actually cross back bullish and then get the breakout and the retest of 200 exponential and simple. We see it never happen. So each time you're just waiting for it to potentially happen. But since then, if you just jumped in right here and then just said, oh, I'll just buy here because it looks like a good setup, that was at $24. From then we went down to $9. So you'd be pretty underwater. So if the setup doesn't present itself to where you can get nice confirmation, a good entry, nice risk reward, etc., there's something out there that is. But in this case, decent trade setup, just a couple days late to the party, which you get a lot. In hindsight, you tend to notice things after the move happens. That's why it's important to pay attention to the stuff nobody's talking about, which is why I've been watching things like pot stocks and gold and silver miners. And, we were watching energy before it was popular and way before everybody basically cycled into consumer discretion, or I'm sorry, consumer staples, utilities, all the safety plays. We were talking about those well in advance, and now that's all you hear about. So the key is to identify what could happen or what likely to happen or what the trend will be ahead of time and then get positioned. Sometimes it's okay to buy into momentum. It just has here's the thing. If you're buying into momentum, you want to be trading with the trend. So if the trend is down, you can short into momentum without the best trade setup because it's likely to continue. When the trade setup's up, you can long into momentum because the trade setup's likely to, trade's likely to continue because you're trading with the trend. But if you're trading against the trend and you're trying to use momentum in your favor, the probability of failure is way too high to be a functional trade strategy, in my opinion. All right, so Parag says thank you. Jay Hoff says thanks. Was wondering why it looks so bad compared to other discount retailers. Yeah, I'm not sure, man. I know they changed their business model at some point in time, so they're not really before they were sort of like a liquidator. They would get a bunch of overstock stuff that was about to expire and they would sell it super cheap. I'm pretty sure they just transitioned into somewhere in between an Aldi and a dollar store type thing, where it's sort of like a grocery store, but it's kind of discount. I don't know. It's just not what it used to be, at least historically. And then also, I mean, if we look at the fundamentals, they're probably terrible. The way the technicals look, the fundamentals are probably horrendous, if I had to guess. Hunkiness says thanks. Yeah, of course, man. Of course. Yeah, but I mean, Jay Hoff, the way I like to look at it is, and I mean, I reiterate it tons and tons of times, is I want to long the strongest and short the weakest. I don't want to long the weakest because it's getting its ass kicked. Now, occasionally, a sector like pot stocks will say, okay, look, they've been getting beat down for a while. They're down 95%. I don't think they're going to zero, but they could. So the risk is so low when something's already down 95%, unless you think it's going to zero. If a crypto is down 95%, I'm probably not interested in buying it. If you have a stock for an actual company with earnings and, metrics that we can use, actual fundamentals and technicals, whatever, I can look at it and say, look, I don't think Tilray is going to go out of business. I don't think that, the cannabis industry is going to be the same size 5 years from now. I think probably Tilray is one of the biggest players 5 years from now. I think probably the cannabis industry is 10, 20, 50 times the size that it is now in 5 or 10 years. But I don't know. But I know that the probability of risk reward setup or the risk reward now, versus probability of success is just exponential because we're talking about 20x's and 50x's, just getting back to previous all-time highs. And you're like, well, what if we don't get back to all-time highs? Well, okay, it's still 15x to half of all-time highs. So we can put in a substantially lower high and still 15, 20x our money. I like my odds. So, sometimes you can make exceptions as long as you know why you're making those exceptions and you can legitimately argue it and back it up. If you can't, then, you're just basically making exceptions, reasons not to stick to your strategy. And then you really got to just work on your discipline or work on your strategy because something's missing. But yeah, we'll go ahead and wrap it up there. I appreciate everybody that tuned in today. Hopefully you guys enjoyed the stream. Thank you to all the group members for showing your support as it makes all of these streams possible. Next stream will be Friday from 11 a.m. till probably 1 or 2 Eastern Standard Time on Friday. This Friday, every Friday. And then, of course, we always have our Sunday and Wednesday streams from 8 p.m. till 10 or 11 p.m. If you're interested in joining the group, you can reach out to me, get access to the 2 exclusive indicators. If you don't want to join the group or don't have the money for it, and you still want to use some awesome indicators, there's a bunch for free down below. Check those out. Yeah, that's it for today. So everybody have a wonderful evening. Lots of big moves coming in the markets. We are getting very, very close to seeing a macro shift one direction or the other, either continuation in the bull trends or reversal, or big stuff coming. So we'll see. Another good week in the market so far. Beautiful amount of trade setups playing out. I'm definitely locking in profits right here, and am 100% comfortable buying back at a higher price if we see continuation, if we see bullishness, because our probability of success will be substantially higher if we start confirming bull trends, as opposed to right now, we're basically just backtesting resistance before it likely we continue our bear trends. So that being said, I'll wrap it up there. It is 10 p.m. Eastern Standard Time on Wednesday, 8/3/2022. Make sure that you remember, obviously, none of this is financial advice. I'm not your financial advisor. Markets are extremely volatile. Please do your own research and trade responsibly. So Crypto Trend Trader with our midweek market update, and I am out of here. Everybody have a wonderful night. Appreciate y'all tuning in. Peace.